Hello, guys. So investingdeepvalue.com actually came about when I was looking for a website that could provide a lot of information with respect to how I can invest in stocks. Yet when I actually tried to look into some of the stocks and some of the information, it was so cluttered, and also the information was very confusing. So I had to come up with a actual plan to figure out how I can invest in stocks based on the data that I get and what is the kind of data I am looking for, right? And I'm a value investor and I'm looking for value in stocks. So that's where I started doing some work, and I'm a programmer myself. And so I created this website. This is not a perfect website, but I've tried my best to provide the best information for anybody who's looking to invest in stocks. Obviously, this is not an advice to buy a certain stock or not to buy a certain stock. I'm just giving you the idea of how we can look at a stock from the data point of view, and not to infer anything for you, but to show you what this website can do for you and how this website is able to provide data that will allow you to make your decisions. So I'm just going to go into the website right away and take a look at that. So I'm going to include the Patreon page. I have tried to keep the cost low so everybody can actually use it. And when I go to other places, other websites are charging almost 3 or 4 or 5 times the cost that I have put on my Patreon page. So stay tuned for all the updates that will be coming in the month's website. So investing deep value is about the value stocks. It's not about a speculation. It is not about you buy today and sell tomorrow, or it's for anybody who's trying to do day trading. This is very much catered towards buy and hold strategy. So my website here is what you're doing is you're basically going into individual stocks. That's what this website is about. So let's see, if I were to go and say Apple, this should come up with the Apple ticker symbol AAPL. I'm going to make this better with the text so people can actually take the data by just entering the name of the company. So let's go Apple, and here's what it shows initially. Apple's price is $174.72. It's gone up 0.37%. So now here's the main information. This is the way to get into a stock, right? This gives you a snapshot of what we're looking for in value. So one of the things that we're looking for is revenue has grown in 5 years. Apple has grown revenue $136 billion in 5 years, right? Shares have been purchased. So there is a share buyback program by many companies, and we're looking for to increasing investor value by companies that would buy back shares. So Apple has actually bought minus 3.75% from last year. Price to cash flow. One of the things that we are looking for is cash flow generation, and we are looking at the price you're paying for that cash flow. So price to cash flow is more than 20. It is higher for Apple, but Apple is a very unique stock. So that's why some of these metrics, you want to look at a company and also know the company before you say, okay, this is a company that I would like to invest for growth and earnings. And so price to cash flow is one of the things that you will see here. There are many companies below 20, but Apple is above 20 here. Return on invested capital. The average return on invested capital, the company invests capital in its growth, and that's about 10.58% on an average. If you look at all them, all the stocks and the market average, it is about 10%. So Apple is doing pretty well here, 48%. Then you are looking at average free cash flow. So the 5-year average free cash flow is positive. What that means is that last 5 years, Apple has generated an average cash flow of $68 billion. Okay. And now you want to look at what the company is paying as dividend. Apple has been paying dividend $14.5 billion. It's not much in percentage. So I'm going to take a look at that dividend here in a second. But we want to see if the free cash flow that the company is generating, is it covered by the dividend? Is it, the company can pay dividend, yet it may not have the cash to pay for it. So are they borrowing? What are they doing to pay that dividend, right? Where are they getting that money from? Here, the business is generating $93 billion, and the dividend is about $14.5 billion. So you can see that Apple is easily able to pay dividend with the cash flow they are generating. Now we're looking into the long-term liability to free cash flow. Ideally, any company that is 5 times, if the long-term liability is 5 times average cash flow, it's supposed to be good in this market. But if you go the conservative approach, people will basically say 3 times average free cash flow is basically very conservative, and it's a good company if it can pay off its long-term liability in 3 years. Right? Now, I have given a few more here. What is the average 5-year PE ratio? Now, I consider this to be 20, but sometimes some averages are 22.5. So average 5-year PE ratio is a tad higher for Apple. And then you have the current PE, which is your the current price to earnings ratio, which is again 26.22. So I give you ratios here. So in the ratios, I give you the dividend yield, 0.50 for Apple, and then I also give you the dividend per share. This is all the past 12 months, right? There's a net profit margin, 26.58, gross profit margin is 43%. You have price to sales, 7.57. So these are your key ratios. Now, I would like to go to the Piotrowski score. So here I give you 2 different ways to look at the company's financial strength. So one is the Altman Z-score. What this tells you is what is the strength of the company's financials? Okay, do they have enough money to carry on their business? Right. So a score below 1.8 is considered a bankruptcy risk, and I'm going to give you an example. And then you have the Piotrowski score, which is the business side of the financials, which means how much business is being generated. So so I also give you here saying the Piotrowski score is a discrete score between 0 and 9 that reflects 9 criteria. So all the 9 criteria used, if you Google it, you will see there are 9 different criteria for Piotrowski scores, which including what how the business is doing in terms of recent earnings, what their debt to equity is, and so many other things. But Altman Z scores give you the financial strength. It's whether this company has enough money to carry on its business. It doesn't have good earnings. So I'm going to give you an example of that very soon. The other thing that I give you is also discount cash flow value. So there are many ways to do discount cash flow, but for now, this is a basic discount cash flow value, and I don't give you much of the calculation behind it because I am okay with this discount cash flow value, but I would like to see there are many ways of looking at it. There's a Graham number. So Graham number is very, very conservative. What that means is that Graham number actually is, your debts or your liabilities, total liabilities, and your total assets. So basically what you're getting is the total liquidation value of the company. And it's a very conservative value. People don't use Graham value anymore because Graham value was used by Graham himself, and he did that during a time when the companies were not doing great and the stocks were not doing great. So that Graham number was basically how much you want to pay for a company, right? And how much you would like to pay, and what's the value, what's the intrinsic value when the companies are actually going bankrupt. So then basically what Graham value gives is what's the liquidation value of the company. So I don't go by Graham value. I'm probably going to add that here. Because if you see Apple, it's at $174. The Graham value is around $30, $24 to $30. So that's about almost 6 times, right? And so basically that is a very low number, very ultra conservative. You won't find stocks based on the Graham value. So the other thing that I give you is 3, 5, 10-year growth. What's the 3, 5, 10-year growth? Here I also give you the dividend. Yeah, you see how if the dividend has increased in 10 years. What about in 5 years? And about 3 years, right? And so what is the net income increase in 3, 5, 10 years, right? What is the operating cash flow increase in the last 3 years, 5 years, and 10 years. Okay. So if you want to make a value decision, this is a very good way to look at what the company has done in the last 10 years, right? Then I also gave you in this area, it's about 1 year, last 1 year, how the company has done, how the revenue EPS has grown, net income has grown. So, and what's the average, you get a snapshot of what the company has done with its share buyback program. So if it's zero, you can already see. I also think it's important to look at the 3, 5, 10 year record of the company. If you're going to be a value investor, you don't want to invest your money in a company that has been losing money, right? So you want to be safe. And I'm especially almost 50 at this point. And so I don't want to invest in any company that does not have good earnings because I want to safeguard myself against any downward spiral of the company, right? Price could go down and I might lose a lot of money. Then you have the analyst rating. I don't go much with the analyst rating, but this is something that gives you a perspective as what other people or other analysts are thinking and whether they're covering the stock, right? The other thing that is very important to look at is the SEC filings, right? So I give you SEC filings here, and if you go to 10K, what I do is basically when I'm looking at a stock is when I go to 10Q, pops up on a new page here, then I go here, and then I want to see what the management is discussing, right? So here the management discussion is here, it gives you the quarterly highlights, and Apple in this case is trying to say that they had very significant impact because of COVID-19 pandemic, right? And they also give you the MacBook Pro, iPhone, Mac, iPad, on the sales for December 25th, 2021. So going back, and then you have the 8K, which is any material changes are reported on 8K. Then I also want to give you earnings surprise. Why? Because I want to see in the last 10 years. So I actually colored this white for 10 years. So you have an idea from April 2012 to 2022, what's the earning looking like, right? This is important for me because I want to see if the company is earning enough money, right? So there has been a couple of red here, which tells me that they have actually earned less than what they have estimated, right? So here's the estimated earnings, and here's your actual earnings, and I give you the date, right? So I want to invest in a company which has consistently done better over a period of time. So one thing which is missing here on the website right now is stock splits. I am going to include that in my next update because this doesn't tell you sometimes how many splits have taken place, right? So if it's 2014, if Apple has earned 51 cents, and let's say if it does earn 51 cents in 2022, which is not great, it has earned $2.10, but let's say it earns 55 cents in 2022. And if there has been stock splits, that will tell you that how many times or how much percentage has the earnings grown. Because this, right now on this particular page, you don't come to know. So unless you know the stock splits, how the earnings have increased, right? The other thing that I gave you was a chart. And this is a trading view chart I've included in my website. So right now I have 3 different, so MACD and stochastic RSI, right? So these are the two I've included here. You could go and actually change the indicators here if you wanted, right? So this is a good way to look at it. Instead of going to trading view, I give you the chart right here. This is a very basic chart. And I also give you what is called news, right? You want to go to the news items here. So I'm going to increase this. So this is just 6 or 7 of these. I want to include at least 20 to 30 different news items here. I'm hoping to update this for the next iteration. Right now, if you see, Apple has a news, what you should know about its rumored subscription plans. These news items come from Seeking Alpha, MarketWatch, Yahoo Finance, and some other websites. So there's the articles here, most of the articles. So the Apple News is nothing but the articles, right? Talking about a particular stock. So that's about it, guys. So if you look at this, this is what I gave you on my website. I want to give you one bonus thing here. So one company that I've been looking at is Cognizant, right? And Cognizant Technology is a New Jersey company, and this has recently grown revenue in the last 5 years. It's about 3.7. They have been purchasing shares. Their price to cash flow is pretty close to 20. So even though it shows, red here, but this is pretty close. 20% ROIC, 10% is your market average. You have average cash flow of $2.3 billion. Okay. Dividend is on $509 million and it's got a free cash flow of $2.2 billion. So that's covered. And look at this. Long-term liability free cash flow is 1 time. Okay. This is only 1 time. I go say if you have 3, that's good, but this is only 1. P ratio is 23.99. Current P is 20.74. And if you look at the Futurisky score, this is 9 for recent business and earnings, and its balance sheet is pretty good based on the scores that we see here. Discount cash flow is 94, 4% under value. But if you look at this top 9 items, you get a very good sense of what this company has been doing. And you look at 3 and 5, 10-year growth, and that's been good too. And they haven't increased dividend. So 3-year dividend has been 20.6%. The 5-year and 10 years been nothing. So this shows you in the last 3 years they have been doing really, really good. Okay. Now, analyst ratings don't go much by this, but you can look at who is covering. Then you have the SEC filings and the recent 10K. Then you go and look at the management discussions here. Right? Gives you all the financial results. Earnings surprises. I know there was a stock split in 2014 right around here, and back then it was about 25.7 cents per share. That has increased to 1.1, which tells me the actual earnings is about 2 point, which is about 400% increase, right? So you can see that revenues have grown 250% in 10 years. Right. And so this company has been earning and beating most of the estimates in the last 10 years. And so that's about it. And I will include my Patreon page on the link below. And if you guys want to try this for a week, just email me. I have my email address on the Patreon page. And once you email me, I'm going to send you a username and password for trial for a week. And after the week, if you like, you go ahead and buy the subscription, and we'll go from there. So happy investing. Just wanted to make sure that I wanted to remind everyone that whatever I have said here, or whatever I am saying here with respect to individual stocks, is only my opinion of those stocks. I am not advocating that you should invest on any of these stocks. So happy investing, and try my website, go to my Patreon page. Let me know how you feel. Thank you guys.